What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at EURUSD, and our entry model keeps repeating again and again. So there's been 3 potential entries today so far. I managed to bag both of these two, recording this final entry live with narration, so I'll be able to walk you through exactly what I was seeing as I executed on this trade. Taking this trade, so I'll go through step by step how this presented itself, and then unfortunately this was the trade that I would have really liked to have nailed, but I didn't get entered. So let's jump into the high time frame analysis now and see how each of these presented themselves. As always, we will start the analysis off on the 15-minute time frame. We're going to be using our session liquidity tracker plugin, which is showing us untapped levels of session liquidity in the way of these extended green lines, and as liquidity is swept, those extended green lines will turn red. Links to all of the indicators that I use are available in the description down below, so if you want to replicate my charts, all the details are down there, along with a quick video showing all of the settings. Going into the analysis now, we can see we had a huge bearish day yesterday. So Tuesday, price just dropped continually through the day with no pullback. Coming into today's session, we can see that we've got relative equal lows here. So we've got the New York AM session and PM session putting in relative equal lows. Asia has pulled back. We've just swept the Asia high prior to starting our London window. So the London window again now is from 2 AM. So I'm no longer monitoring from 1 AM, I'm monitoring from 2 AM. You can see there was a really nice sweep of liquidity at the open of the 1 AM candle, so there was an entry there if I was at the open. However, I wasn't, so I came to the charts 2 AM, which is 7 AM UK time. So we can see at this point on our 15-minute time frame, as soon as I came to the charts, this is what I was aware of. We had swept the high and then pulled away, breaking structure, leaving this breaker block. So this is a 15-minute unicorn entry. So we've got this last down closed handle. It created a swing low and then created a brand new swing high, which swept liquidity. And then price traded straight through this. So instead of acting like an order block and supporting price to continue higher, we have traded straight through it with displacement. I'm just going to mark that as our breaker. So I missed the sweep at the very top of the move, which I would have got if I was in at 1 AM, but because we're trading a little bit later, I missed that. So now I'm looking at the breaker block for a reaction. Inside that breaker, we have this displacement, so we have this bearish fair value gap. And also you can see that we have closed through 2 bullish fair value gaps as well. So we had, one bullish fair value gap here. So we've got a bullish fair value gap between this candle and this candle here. It's only very small, but there is a gap between these 2 wicks here, which is our bullish fair value gap. So we've got one failed PD array in the form of this bullish fair value gap. We've got a second failed PD array in the form of this breaker block. And we have left a displacement as we've broken through and broken structure. We're closing through this 15-minute fair value gap here. So we've got a bullish fair value gap. Pretty much got closed through on this candle, but we are retracing back in at 145. So this is an area of interest. This is a zone that I'm very interested in looking if it's going to hold for a continuation lower, aiming to take out the Asia low and ultimately these relative equal lows from previous day, from yesterday. So we're going to drop onto the 1-minute time frame now, because we are already pulling back into this area so that I can monitor for a potential setup. So on the 1 minute, which we often find after a massive move that we had yesterday, price action, there's very little volume here. These candles are horrendous. So gaps all over the place, very small candles prior to the London window opening up. So this is not nice price action to start with, so it doesn't fill you with confidence. I like to see big flowing candles, which you can see coming into the London session now, we are getting larger candles, so we're getting some potential volume coming into the market. Let's start scrolling forward now. So into the London Open now. And basically, I'm looking for a reaction around this area. So what we've done here is we had some relative equal lows. And then we've aggressively swept those lows. We're pulling back into this range. Have this swing high, which is kind of our last swing high, which is inside that 15-minute fair value gap that we've highlighted in green and inside the breaker block as well. And you can see that we've got low resistance liquidity, so low resistance liquidity run in the form of these trend line wicks here, coming up towards the swing high that we've got there. So this is what I'm monitoring. We're going to get a run on this high to then potentially give me the entry model that I'm looking for. Obviously as well, paying close attention to the timings. So this is where we've got this big reversal is 2:15. So we can see we kind of had 15 minutes down, and then we are pulling back now into the range. So as you will know if you followed any of my videos, I do like to see entries at the open of 15-minute candles. It's an added confluence for me. Again, it's not an essential part of the trading plan, but it is nice if I do see that. It adds extra confidence in the trade. So what we created there is we did create relative equal highs again. So we're kind of engineering liquidity here, pushes up into this high. Just underneath this level of liquidity and underneath this fair value gap. We've now got an explosive move coming up, so we're just about to enter the 230 candle. So the open of the new 230 candle. We've got an aggressive move through that liquidity now. We've come into the breaker block at the open of a new 15-minute candle. So remember, this is a 15-minute breaker block, so we're expecting it to be held on the 15-minute time frame. So we can get closes through on the 1 minute, but when the 15-minute closes, hopefully this will have held. So that would be extra confluence for us. Strong buyback. So this is nice to see. We have an aggressive move up, and then we have an engulfing candle exactly at 230. So that's really, really nice there. Really strong reversal. So we've come up, we've swept some liquidity, 1, 2, 3 above the high, and then an engulfing candle at 230. So this is showing us potentially there's a sell program coming into play. What also happened at that point is we closed over a bullish fair value gap. So that was a bullish fair value gap, which is now potentially acting as an inversion fair value gap. But on this 1 minute candle here, we've also left a bearish fair value gap. So we've got a balanced price range at this point. So what a balanced price range is an inefficiency on the bullish side, followed by an inefficiency on the bearish side. Where the two overlap, obviously there's not been a lot of price action taking place. So when price comes back here to rebalance this, it can lead to a very, very strong reaction. So this is something just to be aware of. We have this area here, which now as we're looking at this, we should be identifying this as a potential breaker block. So at the moment, this is an order block. These are the last two down closed candles. They created a swing low here. This bullish candle just swept the low before sweeping liquidity into a higher time frame point of interest, which is our 15-minute breaker block. We've created the new high, and now we are pulling away. So we've left the balanced price range. We have this order block. So if we can trade through again a bullish fair value gap and an order block, we've already traded through one bullish fair value gap, showing us that potentially a sell program's involved. If you were very aggressive, so 230, 231, you could take an entry if you really thought that this was the trade, an entry off this balanced price range. But the new model that I'm looking for, I'm basing on breaker blocks. So I wanted to see the unicorn model here. I wanted to see a breaker block and a fair value gap in this area if possible. So I won't take this entry, it would be very aggressive. Price does tap it, so at 232, so again the open of the new 15-minute candle, the new half-hour candle, we've just tapped that BPR and we've had a reaction straight away off that coming into the top. Very aggressive. but potentially there was an entry there if you were that way inclined and had a really strong bias that this was going lower. That's the kind of reaction that I'm wanting to see. So we've had this tap of the balanced price range. We've rejected her really strongly, closed straight through this order block. This is now a breaker block. So as soon as we get that closed through there, I'm flipping that to a breaker block because we've disrespected this. We've left a large fair value gap at this point. So there's a gap between this candle and this candle. So we have a bearish fair value gap going into a bearish breaker block. This is where I was placing my entry short. So at the bottom of the breaker block, the stop loss is going to go just above these highs here, so onto the balanced price range, or just above the balanced price range just by a couple of points, expecting that to hold price. So then I have a fair value gap as resistance, I have a balanced price range as resistance, I have a order block as resistance, I have a breaker block as resistance, and I've got an inversion fair value gap here as resistance. So there's lots of reasons why price shouldn't go through there. So if it closes through this, I'm on the wrong side of the market. So that's why the stop loss is placed there. Really nice tight stop, 2.7 pips. Entry just coming into this breaker block. Yet we're outside the open of a new 15-minute candle. There was an entry at the open of the 15-minute if you were very aggressive. But here I'm waiting for a pullback into the breaker block. And there's lots of confluence here for me to expect this to go lower. Take profit 1 will be at this swing low. So I'm looking for a take profit at just over 1R, so that's 1.8R to a take profit 1, and then ultimately, as mentioned in the earlier analysis, I would look to run this at least down to Asia low, take out a second take profit, and then potentially the previous day's low as the ultimate target. So another take profit would be at this level, sell side, and then finally our equal lows down here. As the final take profit. And now, unfortunately, as we start scrolling through price, you will see we get a pullback into this area. Unfortunately, that candle there, which is where the entry would have been, this candle's high is at 1.06002. This candle's low is exactly the same, 1.06002. So there was no overlap, exact precision on this entry, which unfortunately means I didn't get triggered in on my broker. So sadly, I didn't get entered into this trade. Looking back in hindsight, what I should have done is realize that this swing low here is part of a larger time frame order block. So we've got these consecutive up closed candles here, 1, 2, 3 candles to the high. These are forming an order block. So price actually does come into the order block. If I'd have set my entry at the order block instead, I would have got taken in by a point, so I would have been in the trade to ride this lower. As it stands, the analysis is excellent. Look at the reaction that we get here. Pull straight away from it. Just unfortunately, I was a little bit greedy and didn't account for this swing low, this order block, which is what didn't get me in. So again, there are moments when these markets are just so precise that you need to allow a little bit of room for your entries and your exits as well. And I didn't do that in this instance. So unfortunately, this wasn't a live trade that I was able to capture. Price ran away without me. TP1 nicely, so there's 1.7. I would be taking 80% of the trade off at this point. And this is my new take profit strategy. Get the majority of the trade off. The closer we're coming into the Christmas period, and obviously with the war, I'm just conscious that price can act a little bit more erratically. So aggressive take profits, 80% of the trade off at this point. We do have the new week opening gap just below us, which is this highlighted orange line, but I would be running, carrying this down to the Asia low. I'll take another 10% off as we hit Asia low. So close another 10% at that point. And then ultimately, if I was going to hold this through the day, I would want to run this down to take out the previous day's low for a really nice 6.2R. So we can see really nice aggressive move. Down 6.2R, if only I'd have got the entry. So very, very frustrated at that point, didn't get the entry. Had to control my emotions here. This is one of those points where I was contemplating whether I just walk away from the charts because I'd missed that trade or not. But I decided to stick to the plan. And as we scroll forward, this here is where I was looking at an entry. Now you see there's red folder news at this point, IFO business climate. This isn't a red news folder that I pay much attention to, if I'm honest with you. I've never really heard of that one. This is not like a CPI, PPI or a bank rate change. So I wasn't placing much weight on this one. Potentially to my own detriment, I wanted a trade long because I'd missed that trade long. I'd missed that short trade, therefore I was pretty desperate to get in on the action. So this is the trade that I did take. You can see we've taken that liquidity, as we mentioned, 6R would have been there. The reversal has now happened. So we're coming in, we have closed through these two consecutive up closed candles. So these should have been an order block acting as resistance. These are the last two up closed candles. They created a swing high here before creating a new low. We have seen then a strong buyback coming into 330 here. We've closed through bearish fair value gaps. So closing through these bearish fair value gaps is showing me that potentially now we've got a buy program in place. The bearish inefficiencies are no longer being respected and bullish PD arrays are being respected. We had this level here again. If you were very aggressive, we can see that this overlapping fair value gaps are our balanced price range. So we had a bearish inefficiency followed by a larger bullish inefficiency where the two overlap is a balanced price range. So price will come back to that, this inefficient area where there is a significant reaction, which you can see does happen at 336 and price comes away. Again, that's not the entry that I'm looking for. That's not my model. What I'm looking for is I'm looking for a breaker block, which is what we've got here now, with a fair value gap, bullish fair value gap, inefficiency inside it, which is just there. So this is our unicorn entry. We've got an order block below us. So this is stacking up the confluences for the long and understanding where my stop loss placement is going to be. And we've got an inversion fair value gap here. So what I need is protection from 3 PD arrays at least. So I've got a fair value gap, bullish fair value gap, I've got a breaker block, I've got an inversion fair value gap, I've got this order block. So they're stacking up again. So what my entry was is at the top of this breaker block. Stop loss is going to go just below the order block here. So again, a stack of PD arrays. If we trade through these, then the likelihood is that we are continuing lower. So that's the logic behind the stop loss placement. So I'm looking for a take profit at above 1-to-1. Take profit is going to be basically into the bottom. We've got the new week opening gap and this order block here, this area. So this is kind of what would have been support turned into resistance. So you have that liquidity level with a fair value gap, this older level of liquidity with a fair value gap with an order block. So that's where I was looking. I was going to take 80% of the trade off at this point, expecting then, I am aware that we've got all of this internal liquidity that's been built on this run down. So trendline liquidity to take out. So low resistance liquidity run up to taking out the high ultimately. I was hoping that we would come and run that high. I am conscious that we do have the additional lows below us. So price could continue lower. So again, aggressive take profit, 80% of the trade off at just over 1.3R. The entry is not going to fall at the open of a 15-minute candle. So again, neither of these are opening at the 15-minute candle. However, there was an entry at 3:36 there. So again, halfway through a 15-minute candle. I'm going to touch on this later in the next execution and explain this theory a little bit more. But we can see that 3:30 opens, we get a pullback for halfway through the candle, and then the second half of the 15-minute candle creates the actual direction. So it's very similar to ICT's power of 3, where we get the accumulation, manipulation, and then distribution in the correct direction. So that's what we're looking at this point. Accumulation, manipulation. Let's zoom in. Accumulation here from 3:30, manipulation down into the balanced price range, and then distribution away. So there was an entry there, but we didn't have the breaker structure. It's not the model that I'm looking for. Let's see how this tags in. So we get tagged in, really nice. Breaker block holds, inversion fair value gap now, so you can see that reaction, 50% of the breaker block is holding. Nice engulfing candle. There's your news drop candle. So again, I wasn't paying any weight to this because it's not a CPI or a PPI. In fact, I'm not sure it was red folder news on Forex Factory. Well, there was red folder news on Forex as well. So yeah, possible negligence on my part, to be fair, but it did play out in my favour. So red folder news, snagging us 80% off the trade. And then ultimately, I was expecting or hoping for price to come and take out the session high. And we'll see as price continues. It doesn't, and we eventually get stopped out. So that is the first two trades in the London session. Let's scroll forward now. So what we're looking at here now, so this is the hour before New York opens. So New York, the Forex trading window for New York opens at 8 AM New York time. However, so something that Stacey Burke touches on is that the hour prior to the sessions, so this is where my 6 AM start comes from for London and 7 AM start comes from for New York. So between 7 and 8, we can often get what Stacey classifies as a stop hunt hour. So there can be some great trades at this point. So coming into this stop hunt hour, what I've identified is I've identified this trading range. We created relative equal highs here. We have a nice swing low, relative equal lows here. So price has got this nice trading range. We've made an aggressive move out of this side of the range. Time is 7:32 as we are pulling out of the range. I'm looking for our entry model still. So I've seen we've had a sweep of liquidity. We've got relative equal lows here. We've come down, we are just above. So again, sorry, one of the triggers here is we are just above 2 levels of session liquidity. So price has pulled down. It's failed to take these 2 levels out. So my eyes are expecting these to come out. We've come so close. I would have anticipated a run on these. So we've come up, put relative equal highs in, swept those highs into a new half-hour candle, and then we are pulling back into the range. So this is what's got me interested. As we scroll through price, so we'll put in a high. We are going again for the high. Put in a swing high. We're now just attacking that swing high again. We've just pipped over it. So So this is a sweep of liquidity at this point. This is the last down closed candle. So again, just so we can identify and anticipate these breaker blocks forming. This larger candle here is currently an order block. And we have two fair value gaps, bullish fair value gaps supporting price. So we've had a sweep of liquidity, just pipped over it. We've got this order block. Price should respect this order block. Time is 7:40, so we are coming up to the open of a new 15-minute candle. We get an engulfment. We've disrespected that bullish fair value gap. So this now, with this candle close, is a inversion fair value gap. So this could potentially act as resistance. We've not closed through the breaker block. We've wicked through it, but we've not closed through it. So I'm not going to classify it as a breaker block just yet. Now we've closed through it and we've disrespected this bearish fair value gap. So we have a second inversion fair value gap. And we've left a bearish fair value gap here. Candle 1, candle 2, candle 3. So the gap between 1 and 3 is our bearish fair value gap. Again, I'm just stacking up confluences now. So I've got two inversion fair value gaps. I've got an engulfing candle. I've got a standard bearish fair value gap. And now I have, which is what I really want to see, this breaker block. The time is 7:42. So this is where I'm thinking open of a new 15-minute candle. If we can get tagged in around 7:45, targeting relative equal lows that we've got down here. That was the thesis for this particular trade. We can jump into live execution now. So this is one that I did record live as it was taking place. Walk you through step by step what I was seeing at the time. We are looking at a short entry. We're just coming up to 7:45. New York time. We've got relative equal lows below us. We've just swept this liquidity here. Got relative equal highs. We've got relative equal lows below us. This is the target. We can get tapped in. We've got a breaker block here. With a fair value gap inside it. So that's our unicorn order block. Obviously at this point, entry is going to be right here, tap of the breaker block on the start of the new 15-minute candle, which is right now. Stop loss will be just above this high, so we're covering the larger fair value gap. And target obviously will be running this down to these equal lows. We've got low hanging fruit here. We've got these relative equal lows, which I'll take as a TP1. Which is already 2.6R. Just need to see if this breaker gets tapped. I just feel obviously it's been a very bearish move today, and we've got so close to that session liquidity, which is from Friday. Relative equal lows created on Friday. That's just tapped us in now. There's the entry. Quick aggressive drive down to these relative equal lows would be really nice. So we're halfway through the 15-minute candle now. So this is when, through Stacey Burke's teachings, you would expect volume to come in, hopefully. It's driven price wrong way for, excuse me, driven price wrong way for the first half of the 15-minute candle, putting the top wick, and then the second half drives through. So we want this bullish fair value gap now to get closed through in 7-8 minutes into the candle. Nice engulfment there. No bottom wick on it. There we go. Halfway through the candle. Just contemplating whether I take 50% off at 1-to-1 or not. I think I'm just going to let it run. You can see that though, how we got halfway through the candle. So this is tagged in at the open of the 15-minute candle. It pulled people in the wrong direction for the first half of the candle. And then the real direction took over exactly halfway through. We've obviously closed through that bullish fair value gap. So that now is a layer of resistance. Potentially be an inversion fair value gap. $2.6 to take out these relative equal lows. I'll take 80% of the trade off at this point, and then I'll just leave a runner to take out the equal lows, the session liquidity below us. Nearly at the end of that 15, so we're coming close to the open of the new 8 AM candle. That's TP1 hit. 80% of the trade is closed off now. Coming into the start of the new 8 AM candle. We'll run this now, 20% left to get down to the sell side here for a 4.7R. That's just textbook, really nice. So the entry model repeats again. We'd kind of engineered this box of liquidity, swept the box, created a swing high taking this liquidity, pulled through leaving the breaker block on the 1 minute. Inside the breaker block we had a bearish fair value gap, which is what we got tapped on. We'd had an inversion fair value gap, so we were showing that bullish fair value gaps were being disrespected. Likewise an inversion fair value gap between these 3 candles at the very top. 1, 2, 3. So 2 bullish fair value gaps were closed through. This is a balanced price range in fact, because we've got the bullish fair value gap overlapping the bearish fair value gap. So where these two are overlapping here is a balanced price range. Look at that, tapped it to the absolute tick. We had an entry exactly, well, we were aiming for an entry at the start of the new 15-minute candle. We got entered at 2 minutes into the candle, so 7:47. We had a pullback halfway through the 15-minute candle, so this is just putting the top wick in on the candle. It did pull back into that balanced price range, so a really nice rejection exactly halfway through the candle, and then no pullback, straight down. Take our target. Close 80% of the trade at this point. And then we'll just leave the rest to run 4.7. I'm going to take it at this first swing low, although we do have 2 levels of liquidity down here. But I'm not going to lose any sleep over getting an extra couple of points. We're coming into the new hourly candle now, so we could well get a pullback. So I'm not adjusting my stop loss because we could pull back into this order block that we've left. So these last 3, 4, 5 up closed candles, 1, 2, 3, 4, 5. These are now an order block. We could well pull back into that, which would pull us back into our entry. So instead of pulling my stop loss to break even and losing out on that last little bit of percentage, I'll take the risk, take a small loss, although I've bagged 80% of the trade already. It more than mitigates any of this, but hopefully this order block will hold and then price will continue down. I mean, it's just begging to be taken at these equal lows here. And here we can see, sadly, we do get stopped out, so we never hit our final take profit there. Just took a very small loss into the 80% profit that I'd already bagged on there. But that's my 2 winning trades done for the day. So I have a 3 trade rule. I'll take a maximum of 3 trades in the day. 2 winning trades and I'm out. 2 losing trades and I'm out. So that's my two winning trades done and dusted. Pretty good session, to be fair. I'm very disappointed that I didn't get that first entry. So lessons learned on that one, just to give myself a little bit of room by a few points on entries, because price can be really, really precise. Anyway, I hope you found that useful. I hope you found the live talk through of price action insightful. If you did, please leave the video a thumbs up. If you've got any comments, leave them down below in the comments section and I'll be happy to try and get back to you. Your feedback is always appreciated. And likewise, if you're enjoying the content and want to see more videos like this, then please consider subscribing. Dropping videos like this more or less every single day, and it'd be fantastic to have you on board. Thanks for watching. I'll see you again in the next video.